Welcome to the Millionaires Mining Executive Drill Down. I'm excited to be speaking with Keith Neumeyer's right-hand man at First Mining Finance, the president of the company, Pat Donnelly, in the aspect of mining gold resources, raising funds, managing a mining company's balance sheet, negotiating opportunities, dealing with authorities, and strategizing. You won't find a more equipped individual to be president of a company. Pat, how are you today?
Good, thank you. Thank you for having me on.
Hey, well, it's a pleasure, and I'd like to get your take on the gold market and also about the developments with First Mining Finance. I know you guys had a big news release last week. Can you share with us, first of all, how you got involved with First Mining Finance in the first place?
Sure, absolutely. And yeah, it's an interesting story. Maybe a bit of my background. I started out as a geologist and eventually did an MBA and became a mining analyst. And one of the things I learned when I was a mining analyst is that management is incredibly critical to the success of any mining company. And sure, that goes for any sector, but I think even more so for mining. And so I knew when I first met Keith Neumeyer in October of 2014, I knew who Keith was, and I knew his incredible track record with First Quantum Minerals, creating that, and First Majestic Silver. So when Keith, asked me to come aboard, and he laid out his vision for creating First Mining Finance, I didn't hesitate, and you always want to bet on the jockey in this business, and I wanted to work with one of the best, and so I signed on right at the very beginning and started working with Keith in January of 2015. So during that time, as you're well aware, things were just a disaster in the business. I've never seen anything like it, and I've been in the business for a while. I've been in the business for over 20 years, and I've seen some really bad times in the 1990s and early 2000s, but I never seen anything like this. And Keith was convinced that this was an opportune moment to put together a new company.
Interesting. So, going forward with gold right now, we see in September many top-ranking companies, CEOs, and officers buying shares of their own companies for the first time, a lot of insiders buying. Is there a sense that gold has found a support at 1,300 and now company CEOs feel that their shares are undervalued and they want to get more aggressive?
Yeah, absolutely. And I think it's a couple of things. One, we've seen gold go up, and I think most pundits are convinced that gold is going to stay where it's at. It's going to go higher. But what we haven't seen is the equities perform as well as gold. And at some point, that gap has to be bridged. The other thing that I'm seeing is that, historically, mining companies, when things are really rough, and this, I'm referring to the producers, when things are really rough, they cut to the bone. They don't put any money into exploration. They don't put any money into development. They just try to stay alive and focus on margin, and that's caught up to them now. And most producing mining companies don't have a great pipeline of projects to come up with, and aren't able to bridge that production shortfall. So I think what we're going to see is obviously there's more confidence in the price of gold. But the second thing that I think gets missed is we're going to start seeing a lot more M&A activity out there. We're going to see mining companies go out. And there hasn't been any major discoveries in many years, and so these mining companies have to find a way to bridge the gap, and that's going to lead to a lot of M&A activity. So that's why you're seeing a lot of mining executives going in and buying their own paper, because I think we're poised for a breakout in M&A activity, and that bodes well for the developers and the explorers and the smaller producers, and we're going to see a lot more activity going forward.
Well, that's interesting. I want to talk to you about what's the optionality play strategy and why is it superior to other models as you see it?
Well, it's superior in the sense that we're going to see a shortage of gold, and we went out and acquired as many assets as possible, and we're convinced that there's going to be a much better day for gold. So in our case, we acquired 12. We did 8 transactions out of 12 assets, and we're 100% levered to gold. So as we see gold prices go up, and we see the producers generate more cash flow, and as I said before, they have a shortfall of assets. We're going to be in a very good position to take advantage of that. So if gold stays where it's at now, we're going to do well. If the gold goes higher, we're going to do well. And we have 7 million ounces of measured indicated resources, 5 million ounces of inferred, and we're very, very levered to gold and diversified. And that's how that's one of the benefits of the optionality play, is to be diversified, but to stick to one metal and have assets at various stages, various jurisdictions. And so you're levered to gold, and you're levered to that upside. And so it's a win-win for shareholders.
Well, basically, just to understand, the optionality play strategy is to go ahead and buy proven resources in the ground for cheap and make minimal investment expenditures or capital expenditures into these, waiting for the price to go up, and then monetizing the assets. Is that correct, with minimal dilution?
Yeah, and what we have been doing, though, that was what our original strategy was, and it's still part of our strategy. But what we also have been doing with some of our flagship assets, we have been putting a little bit of money to the ground to advance them. And we'll talk more about the Springpole project in this interview. But that is correct. You take these assets, we are buying them when there's blood in the streets. Mining, there's hundreds of, not thousands of junior mining companies. They're about to go broke. And we went out there and took them out, and it wasn't easy. It was pretty difficult. But that being said, with the view, mid to long term view that this is not, that bear market was not sustainable, and we're for the last year or so we've been coming out of that, and long term we're going to see very strong gold prices, and we're going to be poised to take advantage of that.
So that brings me to my next question. How early do you believe we are in this bull market?
I think we're just. I think we're starting to get into it. I mean, I think it really got going about a year ago with Brexit, and the Brexit reminded us all that the world is a very volatile place. There's a lot of geopolitical issues out there that are affecting the global financial markets, and there's very few places to hide. There's less confidence in the U.S. dollar. We're seeing, in the United States, we're seeing a lot of political instability with the current administration in place. We're seeing issues, obviously, in Asia with North Korea. I don't think the Europeans are even close to being out of the problems that they're dealing with. So, and then on top of that, as I mentioned before, the gold miners, all the big gold miners, intermediate producers, small producers, need to replace the resources. There has not been a major gold discovery in many years, and so that's going to catch up to the industry. So I think you have a combination of concerns about monetary policy globally, inflation, printing money, and manipulation of currencies, and then superimposed is the fact that there's not much gold being produced, and the amount of gold being produced is going to come down. And so I think we're, pardon the pun, I think we're going into a golden era of gold, given that all the stars are lining up in the right direction, and we're just starting to get into that.
Now, Pat, we know that the company today is worth more than 300 million Canadian, but can you talk about the vision days, the inception, the framework of putting the world's first and only mineral bank concept together? How was it the depths of the bear market when others were shutting down and you were attacking to find cheap valuations? How did you go about raising money? How were you able to be such a contrarian group of entrepreneurs? What allowed that to happen? And how did you find these specific tier one properties that have the most potential for for First Mining on the short term?
Yeah, it's a great question. So, I started working with Keith in January of 2015. And originally it was Keith Neumeyer, myself, and our CEO, Chris Osterman, and our VP Technical Services, Bill Tanaka. And when we first came up with the concept and started, we had a lot of work cut out for us. We had to, at the time, we didn't have anything. And we merged 3 private companies together and then a reverse takeover, and we raised $7.5 million. And so we were trying to raise the money. And, at that time, oil had also just been kicked in the teeth. And so investors were really suffering because mining equities were killed and the oil and the oil sector was killed. And so, it was a complete contrarian move because when we were going out trying to raise money, people told us we were crazy. Like people were literally laughing at us saying, "What are you guys doing?" At that time, people hated mining. It was toxic. People told us we were nuts. And then the question would be, why are you doing this? And our response was, because the sector is hated so much. It was a once in a 2 or 3 decade opportunity to go out and acquire cheap companies. I was blown away by the valuations we were seeing. For example, Gold Canyon Resources, which we acquired in November of 2015, it only had a market cap of around $30 million. And at one point, it had a $400 million market capitalization. And they had spent about $70, $80 million just on the ground. So, it's trading at $30 million, and they'd spent $80 million on the asset, and we bought it for $58 million. So, the market was broken, and people were telling us we were nuts. And so what we done is, Chris Osterman, myself, Bill Tanaka, we put together a hit list of 100 companies. Bill did an instrumental job in vetting these assets, and Chris and I I'm a geologist. Chris Osterman, CEO, he's an engineer and geologist, and we went through all these assets, and we went to Keith with 10 of them and said, here's our hit list, and then we went ahead and started picking them off, and these management teams, these companies, it was incredible the amount of fatigue. They were fatigued, they were depressed. Some of these companies had run out of money, and they were going to have to go out and raise money again, and they were going to face the wrath of the shareholders. It was just, an absolute bloodbath. And as Keith would say, there's blood in the streets, and we were going to back up the truck and take these companies out. So we got listed in April of 2015, and immediately, the day we closed the financing, I was still running around collecting checks. I wasn't even sure we were going to get this off the ground. I was terrified, to be quite honest. And we got it done. And we got it done because, Keith has done this before. He founded First Majestic in the bear market in the early 2000s. He founded First Quantum in the early 1990s in the bear market. And so, Keith has got a big following. He's got the ability to raise money. He's got a big following. And so we went to Keith's supporters and said, here's our third company. Here's Keith's third company. And we're going to do this again. And we're going to take advantage of these markets. And so we raised the money, and we were off the races. And then, within a 13-month period, we did 8 acquisitions and added 12 assets to our portfolio. And the rest is history.
Now, you just released significant news on Springpole. Can you describe this property and the news and what it means for shareholders and for potential shareholders?
Absolutely. Springpole was at one of top of our list when we went and acquired it. And that was through the acquisition of Gold Canyon Resources. We paid about $58 million Canadian. And what we like about Springpole is it's a big asset. It's got, about, 5.5 million ounces of gold, and nearly all of that is in the indicated category. The previous management had done a really good job of moving this project forward, but unfortunately, got caught in the bear market. And so, when we looked at this asset and we looked at the technical aspects of it, we realized, holy cow, there's a lot of areas here that can be improved. And it wasn't a criticism of the previous management. It was just there were a number of areas that we thought that we could extract value. And so we went back and we re-engineered it. And obviously the Canadian dollar helps and metal prices help. But we looked at, a different way of mining it. We looked at the dilution model. We did some work in the metallurgy and some additional engineering. And what we came back with, be quite honestly, exceeded my expectations. I mean, the Springpole project is one of the largest projects in North America. And not only that, it is highly robust. Let me put it this way. The rule of thumb amongst major mining companies when we're looking at a project, they need to see at least a 15% internal rate of return. And this is an after-tax internal rate of return on assets. On this project, we had a 26% internal rate of return after tax on Springpole. I mean, that's absolutely phenomenal. And that's at $1,300 gold, which is a reasonable gold price, which is where we are right now. The net present value, again, after tax, is almost $800 million US. This project's going to produce roughly 300,000 ounces a year, at an average cost of just over $600 an ounce, about $620 an ounce US. If I take the total costs, if I take the CapEx, OpEx, everything, throw all that in there, the total cost per ounce is $800. So if I throw everything into the CapEx, sustaining CapEx, closure costs, royalties, taxes, everything, it's just over 800 US an ounce. This project would make money at $1,000 US. If gold stays where it's at now or goes higher, and again, this is where the optionality play really gets exciting. If gold goes up to $1,600, $1,700, $1,800, this thing is going to crank out a pile of money. It is a world-class big boy project. So we're incredibly excited about that. We're going to move right ahead to put this thing into a pre-feasibility stage. And, let me put it this way, as you alluded to, our market capitalization now is around 350, 360 Canadian, and yet this has a net present value of almost $800 US. That's about $1,000 Canadian. So again, it's one of the ways where we're buying these assets, we see the internal value, we put some more work into them, and we unlock this organic value. And I think it's a great opportunity right now for investors and potential investors to take advantage of that.
Well, it's definitely an exciting news release because it solidifies and validates the de-risking of that property and how much it has value in it. But also, because you guys are so experienced, the risk level is even lower because we know that you can execute on this. And that brings me to my next question. How is it to work alongside an accomplished legend like Keith Neumeyer, a man that has never failed shareholders in 3 decades?
I feel truly blessed to have the opportunity to work with Keith. And, one of the reasons I came over is because, I believe in Keith's vision. And we work really closely together. And Keith, he's a friend, but he's also a mentor. And he's always thinking. And, one thing that I've learned from Keith is he really understands the markets. There's a lot of quality CEOs and presidents and executives out there, but Keith takes a different perspective. A lot of the current CEOs you see out there are lawyers or accountants or engineers, but Keith is truly a student of the capital markets and the commodities markets in particular, and he really understands, how those markets work. And so, Keith was just, again, instrumental in picking the bottom of the market. Like, he nailed it. He absolutely nailed the bottom of the market. And he's done that before. And it's a skill that you don't see out there. The other thing I've learned from Keith is, Keith is not scared. He's fearless. He when people were telling us we were nuts, Keith never got upset. He was always very confident in what we were doing and had conviction in what we were doing. And that's really boded well for us. So, he's like a rock, and whenever, I have any concerns or worries, I can always go to Keith, and Keith always has full confidence in what he's doing and always follows through in what he's doing and seems to always have a really good handle on the pulse of the global markets, and again, with respect to commodities.
Well, Pat, what are the next catalysts for the company going forward right now? People that are either invested or looking to invest, what are the next milestones that the company will have to surpass, and how much value is going to be unlocked in the next few months to a year?
Yeah, so there's a going forward. We're again, Springpole was very was a very positive result, and we're very excited. So we want to move ahead. We're going to, move forward to a pre-feasibility study. So that'll include a lot more engineering, some geotechnical drilling. We're going to start the permitting on Springpole. We'll have some news on that hopefully the next couple of weeks. So we'll get the permitting going on that. Community relations, First Nations, those sorts of things. So, we're going to move full steam ahead on Springpole. Our other asset that we haven't spoken about, where we've been very, very busy at, is our Goldland project, and that was through the acquisition of Tamaka Resources in June of 2016, and it has 2.3 million ounces there. Specifically, the Goldland project has about 500,000 ounces in indicated and 1.75 million ounces in inferred. And we embarked on a very aggressive drilling program at Goldland in January. We've drilled 24,000 meters and drilled 100 holes in the Goldland. And out of those 100 holes, 87 of those holes had very good intercepts of gold mineralization. For example, hole 106, we drilled 202 meters of 1.39 grams. Hole 32, 64.5 meters of 3.25 grams. And so we were seeing a lot of results like this. So, the goal is to get Goldland up to the same level as Springpole. So we're currently looking at an internal study to see how these drilling results fit. And if we're happy with the results, then we'll move forward with the resource estimate and hopefully a preliminary economic assessment. So we'll have some more news on that hopefully within the next few months. So, Goldland and Springpole are the focus right now. Obviously, we have other assets we're moving forward as well. We're doing a little bit of work at our Hope Brook project in Newfoundland. We hope to do some more work at our Cameron project also in Northern Ontario. So there's a lot of news, a lot of catalysts, and we're going to move forward, and we're going to unlock value for these assets.
Well, Pat, first of all, the company's balance sheet position, what's the cash and debt situation?
Well, we have no debt. We had a little bit of debt, but we've gotten rid of all that. Very clean balance sheet. We were sitting about 19 million Canadian in cash. We're fairly liquid. We trade really. We're on the TSX now. We were on the Venture, now in the TSX. So that's the top capital markets in Canada. We're also trading United States. So yeah, we're very good position financially, and our market capitalization is around 350, 360 Canadian.
Let's I want to ask you a question that's totally your opinion, but on a blue sky potential here, with gold trading at about 15 or 1600, what is this company, when you compare it to the last bull market, should be worth to a potential acquirer?
Oh, it's I would say it's going to be over $1 billion. I mean, you look at Springpole, on an after-tax basis, it's worth $800 million US, and then you add Goldland, which has a very large resource. So we should be significantly higher where we're at right now. We're trading at 64, 65 cents Canadian. This should be, we should be, in the dollar, well over $1 and into the dollars. I don't want to get too specific, but you just look at Springpole. Let me put it this way: Springpole, has a valuation of 800 million US, and our current market cap is about 350 Canadian. What's that? 300 US. So Springpole is 2 or 3 times larger just than our market cap. And then you throw in the other 7 million ounces that the company has for free, and the other 24 assets that are for free. Like, the valuation is just ridiculous, and so it's just an incredible opportunity to get aboard. And if we move, if the gold moves up to 15, 16, oh baby! I mean, this, and what we're sitting on is going to have a lot of internal value, and then you superimpose the fact that the major mining companies are depleting their reserves and resources, and need to have a stopgap measure to fill their production base, and that is going to come to a head. I was just at Beaver Creek last week at a major mining conference, and I had 6 or 7 meetings with producing mining companies, I didn't ask for these meetings. They came up to me and they all had the same message. We got to replace our depleted reserves and resources. We have mandates from our board of directors and our shareholders to replace our reserves and resources. And they're scrambling. And they're asking us to sign agreements with them. We're not ready yet. We need to. There's an incredible amount of value that can be unlocked before that happens, and that's what we're going to do. So again, when I think about the future, I get really excited. I can't sleep. We're in a very good position, and I'm very. It's interesting. We started this company about just over 2 years ago. We were small, little. We had nothing. We had no resources. We were 30 million market cap. Here we are, 10 times larger. Can't wait to see what happens in the next 1 or 2 years, especially in a strong gold price environment, an environment where reserves and resources globally are being depleted.
Pat Donnelly, president of First Mining Finance, thank you very much for taking the time here.
Well, thank you.